David Knibbe, the CEO of NN Group. David, good morning to you here. As I look at some of these comparators on the same period for 2019, actually the numbers look fine. Give us a sense of how you've come through the first half and what you're expecting for the rest of the year.
Yes, good morning, and very happy to be there. Well, of course, it's been an extraordinary first 6 months of the year. Once the COVID-19 crisis hit, our first focus was on taking care of our employees, our company, and taking care of our customers. And the underlying belief, of course, is if you do that well, the financial results will also follow. And I think you already alluded to it. We had a very strong first 6 months of the year. We've seen the non-life company indeed being very resilient. We're not so exposed to event insurance, to travel, and some of the business interruption insurances that are very impacted by COVID. Our solvency is very strong, so therefore we were able to resume our dividend payments that we temporarily suspended. So yeah, all in all, a very strong first 6 months. Now, on your question on looking forward, we've guided that we expect an overall impact of COVID-19 of around 100 million. So that's for us a very manageable number. So the real focus is actually on the strategy that we've launched at the Capital Markets Day in June, which is creating value for all of our stakeholders around us and growing our capital generation by a mid-single digit. And we're planning on doing that by growing again in the European and the Japanese markets once they open up more, integrating the Vivat business, for example, in non-life, and also growing the bank and the asset manager.
David, you said a few things back in the statement to the market in June that I just wanted to pick up on and see whether there's been any evolution of that. You talked about lower premium income as a result of Europe and Japan opening up quite slowly at this stage. Given where we are now from when you made that statement, are you more optimistic actually that we might see premium income rise and that you actually might also be able to put through a little bit of a premium price rise?
Well, if you look at the premium development in the European markets, we've seen that indeed the sales went down very much during the lockdown. But we've seen it in May, in June, and July actually a good pickup of sales. So as long as the economies keep opening up, I expect still the sales to continue to grow. We also see a difference between channels. Our proprietary channels and broker channels actually do very well already. We can do distance sales. There's a lot of online availability. The bank channels are a bit lower still because there's obviously a lot going on in the banking landscape. In terms of the non-life company, in terms of premium increases, yes, it's still a pretty hard market, I would say. We still see room for premium increases. There's still books of businesses that are under pressure. See, for example, the disability book, also on the back of COVID, where we see an increased amount of claims, more disability, more stress-related, especially in the medical sector. So those are probably areas where over time we would expect some premium increases as well.
And what about on the asset management business? Again, you talked about lower fee income being a concern for the business. Is that improving, given that we've actually seen quite positive market activity?
Yes, I was very pleased to see actually the result of our asset manager and then investment partners. The overall asset base grew, but more importantly, we saw a net inflow of third-party business, and I was very pleased to see that. And as we previously talked about, there's a real focus on growing our sustainable products. So European and global sustainable products are doing very well. We've also seen more inflow on the fixed income side. So with 3.5 billion of net inflow for the asset manager in the first 6 months, I do believe the asset manager is also on the right track.
Obviously robust in terms of Solvency II. You have made this decision to recommence the dividend payouts. I think the Dutch regulators have said that's okay at this stage. Are you comfortable that you can continue with that, even as I think in some parts of Europe we are concerned about the potential for a second wave running into the autumn?
Yes, indeed. So we temporarily suspended our dividend following the guidance from IOPA and the Dutch Central Bank in the spring. Now the regulator takes an institution-specific view, and you already mentioned some of our numbers, which are very strong. Our solvency after this dividend is 221%. Our cash on the holding is 1.3 billion, and also we reduced our leverage by not refinancing the 300 million senior debt. So if you look at all those metrics and also the operating capital generation that we project going forward, we're in a very strong position, and therefore we are convinced that we can continue to pay out dividends. And also we have announced that we are resuming our share buyback, which we temporarily also stopped. So we announced a share buyback of 250 million. We already did 183, so the other 67 million we will restart that.
And do we have to assume at this point that even as we see announcements like the resumption of the dividend payout, that all of this is now in coordination with Elliott Group that has taken this big stake in you? What difference has their holding made to the way that you're managing the business?
Well, when we were designing our strategy, which we launched at the Capital Markets Day, obviously, and this was also in my new role, I engaged with a lot of stakeholders, including many shareholders, and we incorporated the feedback that we got from all stakeholders, and then we launched our strategy, and that is what we came out with at the end of June. Of course, since then we are now presenting our results, and so far the feedback from shareholders has been positive. We went on the road after the Capital Markets Day, and we've seen a positive response from the financial markets. Of course, it's still early days. We still have a lot to prove. We set a target of 1.5 billion of capital generation by 2023, and we're well on track to deliver that.
All right, David, good to see you this morning. Thanks for joining us. David Knibbe, the CEO of NN Group.